Hello there. Welcome back to grade 11 economics. In this video, we want to look at a past question paper, and this is a question paper of a common test, and it's of March 2022. So our question paper is from the province of KwaZulu-Natal. So we can take note of that. So please let's not forget to subscribe and share to our channel. Let's share the link to our colleagues what with grade 11 economics. Multiple examination questions will be uploaded on this channel. So let's stay tuned. Let's get notified. So going back to our question, we are going to start on our question 2. So our question 2 is on, obviously will be on section B of our question paper. And you see that the question has got 40 marks and it requires you to spend on average 30 minutes on this question. So on the first part of the question, answer the following questions. 2.1.1, give in two sources of the government revenue. So we know that government collects revenue, and obviously this is mainly from taxation. So we are just going to list different examples of taxation that are going to constitute our sources of government revenue. So we are going to see that we are going to include the issue of personal income tax. We also have value added tax. Excess duties also can be part of that. Those are the different sources that we can just include on 2.1.1 as our sources of revenue. So let's take note. Our question only requires two sources. So going to our other section, you'll see that we have those sources here. We have with personal income tax. We have a value-added tax. We also have excess duties and corporate income tax. So those are the sources that we have. And then we go to the next part of the question. Why is income from exports regarded as an injection? So obviously, we're going to see that in the circular flow model, we are going to have injections and withdrawals. So when we've got injections, these are just additions of income as addition of income in the circular flow. And when there are withdrawals, it becomes the opposite. They are subtractions that are taking place in the circular flow. In other words, we are taking income outside the circular flow by withdrawing. So the question is, why is income from exports regarded as an injection? So when we engage in exports, we are selling goods and services outside the country. So obviously, the goods and services are going to go outside the country, but what we are going to receive as an economy is income or revenue through the sale of those goods and services. So this now becomes an addition that is being introduced now in our local economy. So it becomes an injection. So basically, that's what we have. So let's see, according to the explanation that we have in this video, code 2.1.2. So we are saying 2.1.2, the response is that because it creates an inflow of money and it creates total national income. So basically, this is the response that we have according to this video. So we go to the next question, which is start the diagram below and answer the questions that follow. We are seeing households, and then we are seeing also firms. So we're seeing the arrows that are from firms to households, and then they're going again from households to firms. But we are seeing that households and firms are participants in the circular flow. So basically, that's what we have according to the diagram given. Then beneath that first question reads, identify the participant that is known as a producer from the diagram. So we have got households and firms. So obviously, firms are the producers. So we are going to identify firms as the producers. Then 2.2.2, provide one example of real flow is presented by letter A in the diagram. So we've got letter A, and we are seeing that the letter A that we have is here, and they are saying what can A represent is it is moving from the firms to the household. Obviously, the firms produce the goods, and they move to the households. In other words, the households are buying those goods and they move there as goods. So obviously, the types of flows that we have in the circular flow, we have got the real flows and then the money flows. So in terms of real flows, we are talking about the goods and services, the movement of goods and services. So obviously, A represents goods and services, as we are seeing a movement from firms to households. So money flows now, obviously, in this case, we have got money flows as the households buy from the firms. They give the firms money, so the money goes to the firms and becomes the money flow. So this is what we have. So we are saying on the second part of the question, we are saying goods. We can say goods or we can say services. So we are talking about goods or services. So this is the response that we have. Then 2.2.3 briefly describe the term circular flow model. So we have described the scenario that we have. We've got a circular flow model that we've got participants inside the economy, and then we've got a movement of real flows, and money flows. So basically, that's what we have. And the question is for 2 marks, so you have to briefly describe. So we go to other session to see the description that we have according to this video. So 2.2, 2.2.3, briefly describe the term circular flow model. Circular flow model is a schematic framework that demonstrates the interaction between participants and show the flow of sectors or flow of factors of production, which includes goods, services, and money in the economy. So basically, you can as well try to briefly describe it as the movement of real flow and the money flow between participants in the economy. That describes a circular flow model. So basically, that's what we have. We go to the next part of the question, which reads, explain the relationship between the factor markets and the goods market. So I remember the production of goods. Remember the goods, production of goods, we require the factors of production as the resources to produce those goods and services. So basically, the question is now asking us the relationship that exists. So you're going to notice that there is a positive relationship. There is a positive relationship that exists. The positive relationship is coming from the point of view that we have got factor markets as a variable, and then we've got goods market as a variable. So we are going to see that if goods markets, we are also going to see the demand for factors of production increasing. So basically, that's the positive. They move in the same direction. When we have a reduction for the demand of goods and services, we are also going to see a reduction in the demand of factors of production. So basically, that's the relationship that exists. It is a positive relationship. So we go to the other section again, try to see the description now that we are given according to our answer section. So let's just try to see. So this is the explanation in terms of that relationship. There is a positive relationship between factor market and goods market. The demand for goods creates the demand for factors of production. Basically, that's the basic explanation that we can give there. Then we go to 2.2.5. Why do consumers spend more money on durable goods? So remember, we've got durable and non-durable goods. So this question is saying, why do consumers spend more on non-durable goods? Remember, non-durable goods are those goods that do not last for a long time. And obviously, these goods also, they are cheaper as compared to durable goods. So consumers spend more on non-durable goods because they are cheaper. So it goes back and relates to the income that the consumers are earning. So if the consumers are earning less income, obviously they are going to spend more on non-durable goods because that's the class of goods that they afford. So basically, that can be a reason. So we go to 2.2.5 again and try to see the explanation that we are having. And the question has got 4 marks and requires you to raise 2 points. So the first point says non-durable goods consist mainly of perishable goods that are used on daily basis. So the first point that we have is explaining from the point of view that since they are perishable, they have to move fast. So that's why we see consumers spending more on them. They buy them. Since they are perishable, they buy them, then they use them for a short period of time. Then after a short period of time again, they go and spend again on those and buy them again. So basically, that's the first point that we have. Then second point, lower income earners resort to buying these goods in order to meet their basic needs. And then lastly, lack of savings as a result of financial illiteracy confine consumers into spending a lot on non-durable goods. So basically, those are the points that we are given according to our response. So we go to the next part now, which is now 2 points or 2.3. And it reads, study the following table and answer the questions that follow. We're given a table there where at the bottom we are having expenditure on gross domestic product. And we are having some elements inside where we have final consumption expenditure by households. We've got government expenditure, gross fixed capital formation, and then we've got gross domestic expenditure, which is 4,884,000. So remember, we've got an R here, which is rands, and then all the figures that we are having there are in millions. So we go down. The first question says, identify the method of calculating a GDP in the table above. Remember, GDP stands for gross domestic product. And they're asking about the method of calculating that is being depicted there. We can just try to see, we see that the components we've got issue of expenditures, and finally the figure that we have has got a description of expenditure of gross domestic product. Obviously, this is an expenditure method. So basically, we are saying the method that we have is an expenditure. Expenditure method. And then we go to 2.3.2, what is represented by A in the table. So we have A here, but you see that on top of A, we've got exports from goods and services. So obviously, this represents imports of goods and services. So we represent imports. Imports of goods and services. So I believe that the question that we have, we are saying, briefly describe the term gross domestic product. So we are saying gross domestic product is described as the total value of goods and services produced in the domestic economy or local in the economy. That's gross domestic product. So no matter who is producing those goods and services, we are saying we are just adding goods that have been produced locally in South Africa within the national boundaries, and we add to get the total, and the total becomes the gross domestic product. No matter the person is a foreigner or is a local citizen, that doesn't matter. So what we want is the total value of goods and services that are being produced. So this is gross domestic expenditure. So we now try to see, according to the description that we are given, according to this video, we go again and try to see. We see that the explanation that we have, that is gross domestic product, is the sum of total spending which occur within the geographical boundaries of the country in a period of 1 year. So the period usually is usually or annually, which is over a period of 1 year. So basically, that's our GDE, which is now the gross domestic expenditure. Remember, a gross domestic product, gross domestic expenditure, it just mean the same thing. So we go to the same the next question that we have. So if you go to 2.3.4, it says, why is government spending important for the economy? So remember, government spending is when the government is spending money. So it can come in different forms. Government might be acquiring or spending money on infrastructure development, trying to build some public schools, public hospitals. So it becomes also government expenditure. So it can only be, it can also be explained from the point of view of transfer payments. It can also be explained from the point of view of subsidies, when the government is giving money to firms that are facing high cost of production, so that they face less cost of production. So you'd see that now government spending also is a fiscal policy instrument. That is, remember, fiscal policy uses two main instruments. We've got taxation, we've got government expenditure also is a part of the instruments that we have that are used under the fiscal policy. So basically, that's what we have. So our question now is saying, why is government spending important for the economy? So we are saying, for example, when the government is spending money on infrastructural development, it's going to accommodate workers to do that job, and by so doing, it's creating employment. So basically, it can be a reason that we can come down with. There is creation of employment, and also standards of living of people is going to be enhanced. Those that are going to be employed are going to earn income, and then it's going to enhance their standards of living. So basically, from that point of view, we can be able now to bring down the reasons why government spending is important to the economy. So we go to our other section, trying to see the explanation that we have. So these are the reasons that we have. The first one is saying provision of public goods and infrastructure improves the standard of living for the citizens and attract business opportunities. So you see that through infrastructural development, it's also a government expenditure is going to improve the standards of living. In terms of again, remember we've got the issue of public hospitals. The health facilities are going to be enhanced, so it improves the standards of living, and also it attracts business opportunities of potential investors that want to operate businesses in our local economy. They are going to be attracted by the local infrastructure that is there. So the second point is saying creation of employment in the public sector stimulates household spending in the economy. So there is creation of employment, and on top of that, when there's creation of employment, we are going to see that there's stimulation in terms of household spending. Both they are now earning, they are now going to work as they are being employed through the process of government spending. So basically, that's what we have. So according to the explanation that we have, then we go to the next question. 2.35 say calculate the expenditure on GDP. Show all calculations. So the expenditure on GDP is the last item that we have over here, and we are saying to arrive at B, we are going to say gross domestic expenditure. We add exports of goods and services. We subtract imports. Remember here we say it's representing imports of goods and services. So basically we are saying 4,884,000 plus 450,000 minus 650,000. Then we get our B. So if you calculate it like that, you are going to see that the final answer that you're going to get is 4,684,000. 4,684,000. That's the final answer that is going to represent the expenditure on gross domestic product. So basically, if you go to answer section, we have that summary in terms of that calculation, whereby we are saying 4,884,000 plus 450,000 minus 650,000. Then you get to 4,684,000. So this is what we have on 2.3.5. We will go and look at the next question, which is going to be our 2.4. Discuss the importance of exports in the economy. Obviously, the basic importance is that we are going to earn foreign currency, because we are sending these goods and services outside the country, and we earn foreign currency. So that's the first importance that we are going to see. So exports also, for us to be able to export, we should produce more. So obviously, we should first experience expansion of production capacities in the businesses in the local economy. So through the expansion of those production capacities, there's going to be workers that are going to be accommodated so that we increase production. So unemployment is going to go down. That's the importance. It goes on and bring the improvement of standards of living of local citizens as they are employed during the production processes. So basically, those are some of the reasons that we can raise. So let's try to see the summary of those importances according to this video. We have we try to see according to the information that we are given. So basically, the reasons that we have just highlighted become some of the reasons that we can try to bring down. So the first report is saying the income from exports serve as an injection that increases the national income. That's the first report. Second, I think exports aid foreign exchange for country as domestic output are sold to other countries. And then next, there is an increase in production of goods to cater for the internal markets. And then job creation is ensured in the manufacturing sector. And also government revenue will increase from taxes on manufacturers' profits. So basically, these are the importance that we can try to bring. Remember, our question has got 8 marks. Obviously, it requires you to bring 4 points. So here we've got 1, 2, 3, 4, 5 points. So you can just pick 4 from the ones that we are having. Then we go to the last part of our question. We're saying, how do subsidies in production contribute towards economic growth? So basically, we've got subsidies as a term that we have there, and try to understand what exactly is subsidies. Remember, subsidies we have explained that subsidies is part of government expenditure under transfer payments. So we are saying subsidies is this is money that is given to firms or businesses that are facing high cost of production, so that they face lower cost of production. So the main objective behind the issuing of subsidies is to reduce the final price, so that prices go down and the consumer is protected. And remember, the consumer is the citizen of the country. So basically, that's what we have in terms of essence behind subsidies. So the question is saying how do subsidies on production contribute towards economic growth? Obviously, those firms that are facing high cost of production, if they are given funds and then they face lower cost of production, they are going to be left with more revenue. And then obviously they reinvest that revenue to expand their production capacities. So they produce more. So we are going to notice more production of goods and services, which is going to lead to economic growth. Remember, economic growth is the increase in the production of goods and services in the country when we are comparing from one period to the other. So when the total quantity of goods and services that are being produced for the current year increases to next year, we say there is economic growth. So basically, that's the essence behind economic growth. So we are also going to see that the issue of unemployment is going to be solved as a macroeconomic problem. We are going to see more people being employed as production capacities are going to be expanded, and that is also a positive within the context of macroeconomic problems. So basically, we go to our other session trying to see the descriptions that we have, which is now our 2.5. So this is the responses that we have. So subsidies on production contribute by helping firms lower their cost of production. This is the first point that we have. And then next is saying making it possible for firms to increase their output and ensuring higher labor productivity, occurring as well as best quality products at lower cost. So basically, this point is just trying to illustrate the point that there is going to be higher labor productivity when after the issuing of subsidies. Obviously, when the cost of production is going to be lowered, even the workers' salaries and wages also are going to be enhanced. They're going to earn better salaries and wages since the firm has a reduction in the cost of production. So they can become motivated in the production processes. They produce more. Remember, labor productivity is explained by the average number of units that are being produced by an individual worker. So obviously it increases. So this is what we have on this point. Then at this point, enabling firms to offer their products for sale at lower market prices. So that's the essence behind subsidies. Then we go to the last point, helping consumers increase their spending since goods and services will be offered at a lower price. So basically, those are the points that we have according to this question, which is our 2.5. So basically, this is the end of our question 2. Let's not forget to subscribe and share to our channel. We are still coming with more typical examination questions. So let's get notified. Let's turn on the notification button after subscribing so that we get notified of new uploads that are going to come. As for this video, I'm signing out. Let's meet again in the next video.